Ramesh Damani. I'm so glad that you've taken out time for us at this crucial moment when a lot of things are happening globally and in India. It's been a time since I last spoke to you. How have things changed? The patterns that you see around you when you make investments, how have things changed?
Hi, good morning and happy Diwali to you and all your viewers, of course. Thank you so much for having me and the kind words you said about it. The good news, of course, in short form to report to you, Arundam, is that the markets have done well since we last talked. I think while the indexes may have been treading water, they're still significantly below their all-time high that was established a while back. I think most people in the market will tell you that the markets have been fine, the NAV has been good, individual stocks have actually performed very well. And in a world that is beset with many problems, and two of them are looming us right in the face on November 8th and December 14th, despite that, the Indian market actually remains fairly healthy. I'm, of course, referring to the US election, which is due on November 8th, and the Fed, what the Fed will do on December 14th after the US election. So those two are probably the near-term global events that will affect us. But the undertone and the direction of the market remains what we talked about 6 months back, bullish, early phases of a second bull market, and no reason not to remain invested in India.
In terms of the Indian economy itself, a lot of people are talking about consumption revival. They're saying that investments, especially private sector capital investments, are going to take some time. They're talking about the monsoon, 7th Pay Commission. You are someone who takes a look at these, but in a much more nuanced manner. So for our viewers, give us your take on how you would play this consumption revival, this high credit growth cycle that we're going to see in the personal space.
Everywhere I look, I think there is a consumption revival going on. I mean, you see volume growth in petroleum products, volume growth in airlines, volume growth in two-wheelers, volume growth in four-wheelers. Everywhere I see, there is the underlying tone of a consumption boom. I think once we get the numbers in for this Dussehra and Diwali season, I think it will pleasantly surprise a lot of people. I think they'll be much better than expected. The fact that interest rates are coming down and the fact that we have a government that is now focused on delivering, good economics, less corruption, I think is helping us in many effects. And strikingly, the difference, Arundam, that I find between, say, the West and emerging markets like India is that in the West there was no political risk, there was always an economic risk. You took a spreadsheet and evaluated out the economics of a project and decided whether to invest or not. The State of the Union, their budget is basically a non-event out there. Minor changes in tax policies here and there would happen. But so there was a very little political risk, only an economic risk of a particular project. It has now changed with Trump, setting the cat loose among the pigeons, if you will. You also have to calculate the political risk of NATO being disbanded or severely weakened, of new trade sanctions coming up against Mexico, things they don't deal with the West. Whereas in emerging markets like India, for example, we are now increasingly going through GST, so there will be very little changes in indirect taxation, and there will be a very stable political outlook for the next 2-3 years as far as India is concerned. So I think that's a refreshing shift. We are moving away from a very volatile, politically driven agenda in emerging markets like India to a more stable economic environment. Whereas, as I speak to you, that is perhaps changing in the West. So I think the one thing that the globe will be watching is November 8th election results. And I think while it's very, very likely that Hillary will win, in which case it will be status quo and there will be no difference, if Trump pulls a Brexit, I think the markets will open significantly down globally. I think America will be down, 3-4 percentage points. I think Mexico will be down 10%. And of course, the ripple effects will be felt across emerging markets from Hong Kong to our very own Dalal Street.